Hi, this is Randall Benagas, broker-owner with Averis Property Management in lovely Murrieta, California. In a previous video, I made a reference that I would be talking a little bit more about pricing your rental property. And I want to talk about two philosophies here, and that is there are owners who like to be priced at the very top of the market. So if a particular area is getting $1,750, for example, they want to be at $1,800. They want to be over the market. And then I've got some owners that want to be priced below the market. So if it's $1,750 is market rate, they want to be at $1,700. So, and I'm going to tell you a little bit on what is going to make you more money. And I actually came up with a little bit of a chart here in a second. I'm going to show you so that you can know it's not me just making these numbers up. And I call it my rental magic trick. And seeing is believing. So, oftentimes it's just hard to conceptualize in our mind when we put a certain price in that's going to make us more money. But let me just share this with you briefly here, so I won't go on and on in this video. I'm just going to show you with numbers how you will actually make more money by pricing your property below the market, and then I'll sort of explain why. There's a couple of reasons, why that is. So, but I've got this example here, and I'm going to kind of raise it up a little bit at a time so I don't reveal everything there. So if you can see this first part here, we've got the property that's above market rate right over here at $1,800. So let's assume the market rate is $1,750 in a particular area. Okay, and we figured all that out for you. We've tested, and I'll know pretty much what market rate is. So this one's listed above market. This one's listed below market here at $1,700. So look at the difference here over 1 year. This one, the $1,800, you're only going to get 11 months of occupancy. And the reason why that is when you're listed above market, you may think you're making money every month and you're making more than everyone else, but ultimately the piper will come and you'll get vacancy. Vacancy is the absolute worst enemy you could ever have. It's worse than having a water heater go out and having to pay $900 for a water heater or whatever the fact is. Vacancy, you want to avoid that like the plague, as it will just crush you in profits. Even 1 year, you can see here, it's a $600 difference. So you got $1,700, but you're able to have it rented out the whole 12 months versus $1,800 at 11 months. You already made $600 more in this category. Let's go up over 2 years. Okay, it's the same difference here, $600, but now you've got it at $200. So you're $1,200 better off after 2 years. Okay, now let's go up to 3 years here. 1,800 times 33 months. And you might get 1,800 for the first 12 months, but then it sits empty for 60 days. So my examples aren't like you're going to get exactly 11 months every year. But stick to these numbers. These are tried and these are proven. And so what we have is over 3 years. Sorry, it's blocking my face there. Over 3 years, we've got you're $1,800 more profitable on the property that's below market rate. And let me just kind of close by explaining why that is with the vacancy. When a property is above market, renters are always shopping around. They're always trying to see how much they can get for the very least amount. And they don't mind moving. I mean, I've had renters say they're going to move over a $25 price increase. That is, renters are very price sensitive. $100 difference is like light years. So if you're renting your property out for $1,700 and everybody in your neighborhood's charging $1,800 and they think that they're making a lot of money, you're going to be the one making the most money in the long run, even after 1 year. And I just showed it to you, so it's not like me trying to convince you. These are things that I can bring to the table, and my staff here at Averis. And I do manage a little bit differently, and I like to get into the numbers, into the details. Ultimately, you're hiring me to help you make a profit on this property while preserving it and keeping it protected and clean and managed well. But let's not forget that the reason why you probably have a rental property is to achieve a particular return on investment and to be profitable on that investment. So I will work with you and let you know what market rate is in a particular area. And you don't have to use this philosophy. I mean, I still have owners that say, Randall, I saw that. I want to believe you. It looks like I can believe you, but I want to rent it at market price, and we'll do that for you. Obviously, you're the one in control. I'm just letting you know what your options are so that you can make a very informed decision when we end up renting your rental property out. So I hope you enjoyed this video. My name is Randall Benagas, real estate broker and owner here at Averis Property Management in Murrieta, California. Hope we'll talk to you soon, and I can tell you a little bit more about some of these philosophies. There's just no time to do it in the video here, but anyways, I hope you enjoyed this video, and go ahead and create a great day.